Costco's dividend is the dumbest thing I've heard since just reinvest the dividends bro talk. Costco just flipped the stock market, up 45% year to date, up 14% in the last month alone. There's now more people waiting in line to buy Costco stock than there is people waiting in line to shop at Costco on a Saturday morning. The recent spike is due to Costco announcing a special dividend, the 5th ever special dividend the company has paid out. A special dividend is a one-time, non-recurring payment made by a company to its shareholders. Unlike regular dividends, which are typically paid out on a regular schedule, such as quarterly or annually, special dividends are usually issued in response to a specific event or circumstance. And what a special circumstance their latest earnings were. The company shooting up 17% in earnings, a rise in sales to $57 billion a quarter, a membership revenue jump of 8% with 72 million members now owning a Costco card. If Costco was its own country, it would have the 19th largest population between Germany and Thailand. While the nation of Costco doesn't exist just yet, we know those large, giant warehouses serving hot dogs and organic mushrooms could handle the challenge of satisfying all the needs of its own country. Their special dividend in 2012 was $7. In 2015, it was $5. In 2017, it was back up to $7. 2020, it was increased to $10. And in 2023, or technically it'll get paid out in 2024, it will be $15, set to be paid on January 12th, 2024. The total cash hit for Costco will be $6.7 billion. Costco currently has about $18 billion of cold hard cash on their balance sheet. So why am I mad that I'll be getting dividends to almost buy a Costco membership for a full year? And is it a good idea to buy Costco before its ex-dividend date to collect that dividend? Well, this now means that Costco has less cash on their balance sheet. It's going from their balance sheet to our pockets. Their stock is going to fall the amount of the dividend on the ex-dividend date, and that creates a taxable event. Ideally, the stock price will recover over time, but for those who love Costco, this could create the best buying opportunity to get in at a guaranteed dip after the ex-dividend date. This is sort of a selfish move by Costco. A company pays dividends often to profit share and also to attract new investors. After all, they did just pay more in dividends than a company its size typically does in a whole decade. This is now less money the business has to invest in itself. If a company has excess cash and doesn't have an immediate profitable investment opportunity, it may choose to return some of that cash to shareholders in the form of dividends. This can be particularly true for mature and well-established companies like Costco. Costco may also be paying out this large dividend to maintain investor confidence. Regular dividend payments, they can contribute to building and maintaining investor confidence. Investors may see dividends as a sign that the company is confident in its ability to generate consistent earnings. This also makes sure that everybody is aligned in interest. Paying dividends aligns with the interest of shareholders and management. Shareholders benefit directly from the company's profits, and management, which often holds a ton of shares themselves, is incentivized to run the company efficiently and profitable to maintain or increase the dividend. But it's not all roses though. Let's get into the cons of paying this special dividend. By paying out billions of dollars to shareholders, this could signal the company actually lacks attractive investment opportunities or is unsure about future cash flow generation. I mean, after all, why didn't they spend this on more stores? Don't they want to expand in the future? I mean, they only have 871 warehouses around the world. Was this really the most effective use of the company's excess cash? If they had done share buybacks or paid off their debt, this would have been a win-win for investors. We also have to think about the opportunity cost, what they could have done with this cash instead. We're talking about potentially research and development for some new products, acquisitions, other investments that could have delivered better long-term shareholder value than just paying out $15 to each shareholder. So now that Costco announced this dividend, the stock price may actually go up as investors are trying to get in at that special dividend They're trying to get in before that ex-dividend date, but the stock price, it will certainly go down on the ex-dividend date. And that's going to actually create a taxable event. Those special dividends, they're typically taxed at the same rate as a regular dividend. Perhaps the craziest part now, though, is that investors' expectations are heightened. Payment of a special dividend raises expectations for future dividends. If the company suddenly isn't able to pay out a $15 dividend every year, investors are going to be disappointed and they're going to start rage quitting out of Costco. At the end of the day, looks like Costco's plan is working because everyone is talking about this. The media is reporting it, new investors are coming in, I'm making videos about it. This just reaffirms why so many people are loyal to Costco, because they do things like this. But I have one big suggestion for Costco, a way to improve this for next time. Instead of paying us in cash, how about you start paying us in gold bars? Costco sold $100 million in gold bars during its most recent quarter. The 1-ounce bars typically sell out within a few hours after they appear on the company website. Demand has gotten so bad that Costco now limits gold bars to just 2 bars for each membership. What if Costco started backing all their cash with gold? What if they become the true Federal Reserve? Gold prices have increased 12% this year. One person who was a lover of Costco stock was the late great Charlie Munger. While Berkshire Hathaway no longer owns Costco, Munger maintained a personal stake in the company. He owned over 167,000 shares of Costco personally before his passing. His estate is expected to get $2.5 million in this special dividend. Munger praised Costco before his death. He said, "I love everything about Costco. I'm a total addict. I'm never gonna sell a share." Costco is obviously an amazing company. But with the 45 PE ratio currently, it might be slightly overvalued. This didn't stop analysts from boosting their price targets after their earnings. You can see down here, they all increased their price target after Costco's latest earnings. The company currently has 19 buys, 7 holds, and 0 sells. However, with a consensus price target of $618.92, that's potentially 6% overvalued from today's prices. Though just know analysts, they're only focused on short term, maybe within the next 12 months. They're not really trying to predict the long-term future of these companies. So if you're a long-term believer in Costco, this could actually be a great buying opportunity. Want to see my full $165,000 dividend portfolio? Check out the Patreon where I post all my weekly buys. This past week, a company went up over 17% after I had highlighted it the week before. My videos are always found in podcast form under the Collect Cash podcast name. Let me know how much you'll be making in Costco dividends, and I'll catch you on the next one.